please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Thank you, Bill, and welcome to the closing bell, everybody. The second day of the fourth quarter, nearly as strong and certainly as record-setting as the first. Looks like on the close, even the Russell, the small caps, joined the other major averages to close in positive territory. Given that yesterday was a record close for all four, that means today is too. Look at the Dow now closing above 22,600 for the first time with an 84-point gain on the bell. The S&P 500 up 0.25%, about 5.5 points to 2534. The Nasdaq up to 6531, also a 0.25% gain today. And the Russell 2000, which was in the red for much of the session, did add 2.5 points there at the bell to close just around 1512, just shy of that level. So again, record highs for everybody. Intel, Walmart leading the way for the blue chips today. Let's bring in our group here to talk a little bit more about it. Joining me now is CNBC senior markets commentator Michael Santoli. Also with us, Dennis Berman from the Wall Street Journal. Joining us today, and Brian Singer, who is a partner at William Blair and portfolio manager of the Macro Allocation Fund. We'll speak with Sherman Pishavar a little bit later this hour. Michael, another strong session here. Another strong session in the very same way that we keep talking about, which is kind of flat to open and then grinding higher, 2 to 3/10% gain per day. Today, again, you keep wanting to say it's too calm, it's too orderly, it's been stretched on too long, you have too long a streak of wins. However, when you have autos up 2.5%, auto stocks up 2.5% today and 12% in a week, home builders up 2% today, banks up 8% in the last month, and airlines up 5%. So that's either the market telling you a pretty good message about the economy, or it's some kind of a wishful head fake rotation of everybody deciding what the hot stocks are going to be for the next couple of months. We don't know exactly what that is, but I think that the market has kind of earned the benefit of the doubt on this one. Dennis, what about you?
Well, it's very interesting to hear Warren Buffett's remarks about buying stocks instead of owning bonds. If you look at the spreads between the high yield index and the investment grade index as well, man, those spreads are incredibly tight. So if you're looking to get any bit of yield right now, you have to go back into stocks, and the market's responding. And as Mike, I think, rightly points out, the market is sort of presenting bits of data that make it possible where you feel at least comfortable owning those stocks. We used to have Dow 20,000 hats around the Wall Street Journal, Kelly. And now I have to print Dow 23,000 hats, and it just been a few months.
I don't think you're printing 23,000 hats, but we will have more on Warren Buffett's comments in just a moment. First, some news on taxes out of Washington. Elon Moy brings us the very latest. Elon?
Kelly, a senior Republican tells me that the House tax plan is highly likely to include a fourth top rate on wealthy households. Remember, the tax framework from the Big Six only included 3 rates, 12, 25, and 35%. But it did give lawmakers the option of adding a fourth rate for the richest Americans, and at least in the House, they appear ready to take it. No word yet on what exactly that top rate would be, but I'm told that it would not be above the current rate of 39.6%. Now, this move could help Republicans diffuse criticism from the left that the tax plan so far primarily benefits the wealthy. In the Senate, Finance Committee Chairman Orrin Hatch said today that those attacks are unfounded until all the numbers in the plan are settled, and he did appear to signal that he's open to that fourth rate as well. Kelly, back to you.
All right, Elon, thank you very much. Brian Singer, just interested in your reaction in terms of the significance of a fourth bracket here and moving the tax plan along and affecting your investments.
I don't think it's that significant. It basically is expected. It's what you'd expect them to do to try to get this entire tax plan through. This eliminates, to some degree, the criticism that it's benefiting the rich. So in that sense, it's expected, probably priced in, no great impact.
All right. Well, we know the Oracle has been outspoken on taxes. The Oracle of Omaha, of course. Billionaire investor Warren Buffett sat down with Becky Quick earlier today in Omaha. And Becky joins us now with some of the highlights, including a big deal Berkshire announced. Becky?
Kelly, that's right. Berkshire has over $60 billion in cash on hand. At least that was the last time we checked. All that money's been burning a hole in Buffett's pockets, and today we find out what he spent some of that money on, although we don't know exactly how much he spent for the purchase. He wound up buying a 38.6% stake in Pilot Flying J. That's the largest truck stop company in America and in North America by a long shot. That stake is going to jump to an 80% stake by the year 2023. And let's just run you through some of the numbers on this this deal. It's the 750 retail locations in 44 different states. It's the fourth largest trucking fleet in the nation, and that's because they're delivering so much gasoline and so much diesel fuel. He said something like every 22 seconds there's another gasoline drop that they are doing somewhere in the country with these trucks. It's 70,000 parking spaces for trucks that they have at the truck stops, 4,900 showers for the truckers when you stop through these places. And by the way, before this deal today, this was the 15th largest privately held company in the United States based on the Forbes 400 list. 27,000 employees that work here. And Kelly, this is a classic Buffett move, coming up with a company like this, buy something you like, something you know you're going to be a long-term holder and a holder for forever over this extended period of time. What is an uncharacteristic Buffett move is something else that's been going on. That's been not selling stocks as we get towards the end of the year, because you're watching to see what Washington, D.C. is doing. You were just talking about this with the corporate taxes, all the uncertainty about what's going to happen with it. It has made Buffett do something he never does, and that is wait and see what happens with Washington. Here's why.
I think there's a lot of that going on, because I think there's an expectation that if they reduce, that if they have a tax act, they will cut the rates, certainly corporate rates, and it'd be kind of foolish to have a gain now and pay 35% tax on it if by waiting a few months you were likely to pay 25%.
So, Kelly, all of that is what's something that's been changing Buffett's behavior. He said probably to the tunes of billions of dollars when it comes to Berkshire Hathaway. He thinks that this is going to play out over the long scheme. I know we talked about it about an hour ago, but it really makes you wonder what's going to happen to the market short term when all of these people are kind of holding off. Maybe there's pent-up demand. We don't know what will happen with Washington, but it all sort itself out in the next few months.
Oh, yeah, we're going to ask our guest about this in just a moment. Becky, I'm just curious on the individual tax side where he's been so outspoken over the years. Did he broadly seem to support this plan?
No, he did not. He says he does not like a lot of the things that this plan does, and we didn't go through every single one of the brackets, the idea of shrinking to 3 brackets from the 7 that exist right now, so obviously no idea what he thinks about adding a 4th. But one thing he's very outspoken about is the estate tax. He said getting rid of the estate tax he thinks is a terrible idea, even as somebody who would potentially benefit down the road from the estate tax. He said, if you think that this is something, they like to call it a death tax as if it impacts everybody who dies, and that's not the case. He said to illustrate his point why he didn't like it, there were 2.6 million people in America who died last year. He said only 5,000 of them would have needed the estate tax or have gone through the estate tax. So he said if you think that this is benefiting anybody but the very richest of Americans, you better think again.
Wow. All right, Becky, great stuff. Thank you very much for joining us once again. That's Becky Quick out of Omaha. Michael, let's go back to his point about the capital gains tax for just a moment, because it is kind of interesting to think for a second, is there pent-up selling? We talk about the tax plan is passing and being a bullish factor, but what if when it passes, it's bearish because everybody thinks, now I know the rate at which I can sell?
It could be that, although I think we should make a distinction. I think what Warren Buffett was saying was, since he's the CEO of a company, if he were to sell as Berkshire Hathaway, corporate tax rates might be lower down the road. We're not talking in this tax plan about lowering the capital gains tax for individuals.
Okay.
So it's not about you and me deciding, oh, you know what, let me wait until January 2nd to sell all my stock.
Corporate tax period,
if it's a company that owns stock or owns an investment, then maybe you would wait.
Which is interesting, Dennis, because it makes you wonder then about the conglomerates. If there's anybody else out there who's thinking about doing things like spin-offs, like divestitures, where that could affect those choices as well, I'm sure there are deal makers crawling all over that.
Absolutely. I have a rule, Kelly. If you something you don't understand on Wall Street, the answer is taxes, and that is a very good point. If you can dispose of an asset with a very low tax basis, something you bought 40 years ago at a far different rate, I think Buffett has got it right. Just wait and hold on and see where that comes in. That makes perfect sense.
What do you think, by the way, of his deal to buy the truck stops? I mean, you're going to have a 40% stake in this one.
Look, he's going to soon own 80% after a few years. I think it makes perfect sense. A good way to spend money. He's not going to lose money. Our fixation on electric cars and driverless cars notwithstanding, it's going to be many decades until those vehicles are off the road and don't need gasoline, particularly large cross-country trucks. So I think he's going to be fine. He might have gotten a little discount by getting the Haslam family to sell to him. So I think it makes sense. I don't think it's that sexy. It's good, it's fine, it's solid, but nothing more than that. Yeah, exactly.
Yeah, I mean, I think if you look at the whole Berkshire Hathaway portfolio right now, he's so big right now. What he's doing is his new investments are placing him at the center of the movement of stuff, right? It's the railroads, it's the trucks.
Dennis, what would you add there about, these are some pretty big moves today?
Well, as we know, the airlines have been on rough times for a while. But look, I think if we're wondering about stocks here, if we're printing Dow 23,000 hats, Kelly, there is real core improvement and economic growth indicative in a number of companies, as Mike was pointing out. So there is a basis for us not to have total doubts about where this rally is headed. But again, the airline stocks are so fuel price dependent that can reverse on you at any moment too.
Well, one thing, Michael, to add on the tax issue before we move on from that, Haynes was one of the worst performers today in the S&P. It was down about 4.5%. Interestingly, it could suffer if the tax reform happens. Companies with a lot of U.S. profits, Barron's was kind of outlining the whole thing over the weekend, but there's a number of them, including Haynes Brands, Insight, MNK, where oddly, if you actually get this type of reform, they might go from having a single-digit corporate tax rate to something in the low double digits.
And that was the concern surrounding the whole idea of a border adjustment tax, where essentially all you're doing is a radical shift of the tax burden among companies without necessarily changing the overall. And it was one of those things, if you built the system from the ground up, maybe that's how you would do it. But yeah, just the way a lot of small stocks especially are trading almost strictly on tax cut hopes, some of these are going to be on the wrong end of that.
And Brian, go ahead, Dennis.
We have to remember as well that if there's a change on the deductibility of interest, that rewrites the entire corporate finance picture, and there will definitely be winners and losers, perhaps ones we do not even expect that come out of that reorganization. So there's a lot that still needs to be answered and gone through.
All right, well, we have some breaking news. Speaking of the transports, it's on Ford. Phil LeBeau joins us. What's happening, Phil?
Kelly, we're about 20 minutes away from CEO Jim Hackett meeting with analysts and explaining to them his plan to transform Ford. Remember, he became CEO in May. He said, look, I want to take the first 100 days to assess the company, see what we want to do. Here's his 100-day plan. Really 3 key points here. More on trucks and SUVs, fewer investments in cars. Charging up electric vehicles while spending less on gasoline-powered vehicles, less on the development of internal combustion engines, and finally, cut costs substantially. Here's an example of what we're talking about. Ford's plan, according to Hackett, they will cut material costs over the next 5 years by $10 billion. That's an incremental increase compared to what they had previously forecasted. Also, Ford plans to slash engineering expenses by $4 billion over the next 5 years. Again, Jim Hackett will be laying out all of the details for his plan in about 20 minutes. He's going to be holding a webcast with analysts on Wall Street. We'll be listening in. We'll have updates as well as some sound from Jim Hackett. Finally, guys, take a look at shares of Ford versus General Motors year to date. And the reason we're showing this is they typically move in tandem, but you can see that General Motors has been breaking out much more aggressively than Ford over the last, month and a half, 2 months. And a lot of that is because people are saying, look, Ford's put the building blocks in place to profit on autonomous drive vehicles and electric vehicles. We'll find out about Ford's plan. Again, more details about it in about 20 minutes. Kelly?
All right, looking forward to it, Phil. Thank you very much. And Brian, before we go, I just wanted to squeeze a word in with you about emerging markets today. Up another 1.5%, even with the strong U.S. dollar. That's 30% year to date. I mean, we don't see this kind of performance last like that very often.
No, we don't. It does, however, seem to come in bursts for the emerging markets, and there's a lot that's quite beneficial right now that's going on. This is the first time in a long time where we have growth throughout the world. Basically, every region is reporting positive growth, and we're back to that kind of long-term 3.5% real that we've seen for the last 7 decades or so. That's kind of what people are looking for, what's getting priced in. Importantly, though, so many institutional changes with rule of law and property rights have been made in these markets, and that does nothing but increase the fundamental value of assets there. And that's something we can ride for a longer period of time than just this year.
I know. 5 or 10 years ago, I would have thought you're right. But lately, I don't know. It feels like it takes a long time for progress. Anyway, thank you guys for joining us. Brian Singer and Dennis Berman to talk about
Thanks, Kelly.
today. Former Equifax CEO Richard Smith getting grilled on Capitol Hill today over the company's massive data breach. Up next, we'll discuss how future hack attacks like this can be prevented and how it'll impact Equifax's future. Plus, famed venture capitalist Shervin Pishavar is here to tell us when he thinks startups like Uber and Airbnb, which he's invested in, could go public. And we want to hear from you. Contact the show. Send us a tweet, a Facebook message or something, or anyway, email us. You're watching CNBC, first in business worldwide. This can be prevented and how it'll impact Equifax's future. Plus, famed venture capitalist Shervin Pishavar is here to tell us when he thinks startups like Uber and Airbnb, which he's invested in, could go public. And we want to hear from you. Contact the show. Send us a tweet, a Facebook message or something, or anyway, email us. You're watching CNBC, first in business worldwide. Take a look at shares of Equifax today as former CEO Richard Smith apologized to Congress about the hack that compromised 145 million people's personal data. Smith explained the failures and promised Congress they've been fixed.
The human error involved the failure to apply a software patch to our dispute portal in March of 2017. Technological error involved a scanner which failed to detect that vulnerability on that particular portal. Both errors have since been addressed.
Well, joining us now are Brett Horn, a senior equity analyst at Morningstar, and Leo Tadeo, chief information security officer at Sixterra. Brett, you cover the company, and the shares are up 2.5% today. Do you think that he has quelled some concerns around the stock?
Yeah, well, I think it's really just a case of no news is good news. I don't think there was really any material new information that came out of the hearings, and the market viewed that positively.
What about tomorrow? He may be going up against Senator Warren, yes, if he's headed over to the Senate?
Yeah, and I think he's going to continue to face very strong criticism, and I think essentially, going to Congress and taking his lumps is him, performing his last act as CEO, and it's appropriate since this happened under his watch.
Leo, what's your take on what we've learned from the company in terms of what was breached in the first place, what it's been done to fix that now, and the fact that lots of Americans have signed up for their protection going forward?
Right. Well, we're seeing the same old security strategies fail time and time again. Most enterprises have a hard outer shell, meaning they're using a very robust perimeter defense, but not much defense interior, not much defense inside the perimeter. And we note from the CEO's statement that the adversary had access to the interior of the network from May 13th to about July 29th. That's an extraordinary amount of time where an adversary can do damage. So I think it's a lesson for enterprises to focus more resources on strengthening the interior of their network rather than trying to just monitor it or maintain significant perimeter defenses.
Brett, what kinds of assumptions are you using for potential liability that Equifax might face? I mean, it seems to me that's the key swing factor in deciding what this company ultimately is worth. And also, Wells Fargo is up on the Hill today as well, years after, these offenses in terms of its account scandal. So you can't necessarily know exactly how quickly the Equifax matter is going to be put to rest.
Yeah, well, the breach at Equifax is unprecedented in some ways, certainly in terms of the scale of the breach. There have been similar type of breaches in the past. It's pure Experian had a breach a couple of years ago, much smaller one admittedly, but we also see things like the Target breach and so forth. In all those historical cases, in terms of one-time legal costs and fines, those hits have been material, but ultimately manageable for those companies. And I think, frankly, that's going to be the case for Equifax as well.
Brett, yesterday, Sheila Bair, the former FDIC chair, joined us and mentioned that she thought bank-like regulation could be coming for these companies. And why shouldn't it? And if it does that significantly change their earnings power?
Well, I think that's the other component of it is what are the ongoing costs. I think it's certainly safe to assume that there's going to be an increased focus on security. There's going to be higher spending around security, whether that's at the company's own initiative or through government mandate. So I do think it's fair to assume that there will be a long-term margin hit from this as well.
Leo, what do you think the long-term security aspect implications of this should be, both for Equifax but for all the credit rating firms?
Well, there's no doubt that there will be more regulation and more spending on security. The question for me and other cybersecurity professionals is what can the adversary do with the information that was taken? Can they defeat other security controls? So we know that identity theft is a real risk coming out of this breach. But since the adversary now has information on millions of consumers, can they use that information to break down other defenses? We have knowledge-type questions that can be defeated. We have social engineering-type activity that can be conducted with this information. So my concern is not just the identity theft problem, which is significant, but also the ongoing security threat from the use of this information by sophisticated criminals.
All right. Mr. Horn, Mr. Tadeo, thank you both for joining us.
Thank you.
We'll hear more from Equifax tomorrow. Now, he's invested in startups like Uber and Airbnb. Coming up, famed venture capitalist Shervin Pishavar weighs in on the future of his industry and whether more startups could choose to stay private instead of launching an IPO. And Procter & Gamble holding a webcast with corporate leaders to answer shareholder questions as the company's former CEO promises to take the gloves off in the fight against activist investor Nelson Peltz. We'll have those details for you straight ahead. Corporate leaders at Procter & Gamble holding a webcast earlier today to answer shareholder questions as the proxy battle heats up. Sarah Eisen has stayed very late for us and joins us with some of those highlights.
Well,
Sarah?
It's an important company, and it is crunch time for both sides in this proxy fight. Today, P&G hosting a webcast this afternoon to address shareholder questions, many of which are points that Nelson Peltz continually raises in some of his criticism of the company in his bid to join the board. For instance, Peltz has gone after the company's insular culture, that most upper management are P&G lifers and the board only taps insiders as CEO. Well, board member Meg Whitman did address the culture critique. She was on the webcast. Listen.
Many of you may not know I actually started my career at Procter & Gamble, and I think that may have been true of the company 20 years ago, maybe even 10 years ago, but increasingly they are adding outside hires in key roles. So the general counsel, the CISO, the CIO, the brand new head of North America, healthcare comes from outside the company. And they're also doing, I think, a very good job of interacting fast in the environments, whether it's in Silicon Valley, the digital environment. And so I, as a board member, I see a big change in from P&G Think to being very, business savvy globalists.
And this is the first time we've heard publicly from a board member about the fight behind the scenes. Board members are taking meetings with shareholders along with upper management. The company did say, though, it's open to adding new board members, but that Peltz is just not the right fit. In fact, CEO David Taylor even said that they're in the vetting process for new members to the board. Listen.
We will continue to look for globally experienced board members who represent the next generation of leaders. As the world is changing fast and new and different perspectives will be needed. Digital perspective and big data analytics experience will be important, as our ability to use the new marketing vehicles and media will only accelerate as AI and machine learning become important value contributors. We will look to add CPG experience as well as specific knowledge in our categories like healthcare, and we will continue to build a board that reflects the consumers we serve.
Actually, Peltz has argued that he brings that consumer packaged or CPG experience with a strong track record as an investor and board member. P&G is saying Peltz's experience is mainly in food companies, which is very different than household products, and that the timing and the alignment with the board is just not right now for Peltz to join 2 years into this transformation of the company. I will say, guys, Tryon recently got the backing of two key proxy advisory firms, ISS and Glass Lewis, to add Peltz to the board. And the battle is on between the two sides to convince especially those institutional investors and index funds, which tend to vote late in these proxy contests, to vote for their sides.
It's amazing. I mean, no doubt the whole situation is going to be sides of it.
Also, the biggest ever company
in terms
to
of
get the proxy battle.
Size of a target, right.
Cap.
I also wonder if investors are sitting there saying that they kind of win either way. Right? I mean, Peltz has been this catalyst for at least a discussion about how to set up the company and the board and everything else.
Is it like ADP and Ackman, where the company's fine on its own, and maybe it'd be better with him, but maybe it
could be a bonus, and it's otherwise well run. I mean, and also, maybe in the company's favor, if he were added to the board and there was not an appetite to realign the entire company the way he says, like, what's the productive role he's going to play aside from being kind of a gadfly on the board? I don't know.
Well, and his argument would be he would only be one of 12 members. Yeah. It's not like he's going to come in and split the company into his new organizational structure, which he does propose. He would just bring fast, urgent ideas. And as for the share price, the stock is up 9.5% so far this year. So no question, the fact that this fight has ramped up adds to the pressure on management to show that they are executing on this transformation. We have seen that in the last few quarters. To David Taylor, the CEO's credit, the stock has outperformed since he took on the role about 2 years ago, but it's really been supercharged since Nelson Peltz revealed that he had such a ginormous stake, $3.5 billion earlier this year, and has agitated for...
Sarah, thank you very much. Sarah Eisen. And it's time now for a CNBC News update with Sue Herrera. Hi, Sue.
Hello, Kelly. Here's what's happening at this hour, everyone. Russian President Vladimir Putin offering his condolences to the U.S. after the deadliest shooting in American history. Putin speaking at a ceremony in the Kremlin as the new U.S. ambassador to Russia, John Huntsman, presented his credentials. Former Vice President Joe Biden campaigning for Alabama's Democratic Senate candidate Doug Jones, calling him a man of integrity. Jones is running against Republican Roy Moore. It has been 20 years since a Democrat held an Alabama Senate seat. Over 38,000 pounds of ground turkey, including the Publix store brand, and Fit and Active fresh ground turkey have been recalled due to metal shavings. The meat was processed and packaged by Prestige Foods, which is a North Carolina company. And The Boss opens on the Great White Way tonight. Bruce Springsteen to begin an 18-week-long residency at Broadway's Walter Kerr Theater. It's one of Broadway's smallest, with a capacity of under 1,000 seats. Springsteen says the show is just him, with his guitar, piano, and the words and music. And Kelly, we're just getting an update out of Las Vegas, the news conference that's going on there. The update, Sheriff Joe Lombardo says they have identified all but 3 victims of that shooting at this point. It's ongoing, and I know Jane Wells is coming up in a few minutes. Maybe she will have more details on that. I'll send it back to you.
Sue, thank you very much, and we will get the latest on Las Vegas once we come back from this break. In terms of the investigation into the nation's deadliest mass shooting, an update on casualties from the attack, that's coming up in just a moment. Also, President Trump visiting Puerto Rico to view the devastation caused by Hurricane Maria. We'll also head live out to that island for the latest recovery efforts coming up.